Good morning, everybody. Welcome back to your live virtual classes and with Paper 1 Accounting and Company Accounts, chapter number 11. So today is the last class that we will be completing the company accounts. And I also told you, as promised, we'll be looking into the 2 attempts question papers, that is June 2024 and September 2024, with respect to this particular chapter and all these units put together. Okay. So what did we do in the last class? So we were dealing with regard to the issue of redemption of debentures. So the unit number 5 that we did was redemption of preferences. So completely we did all the 10 illustrations. We then understood that it's quite important that we issue either new shares or we create a CRR or we go for an option of both. And then I started teaching about the debentures part. So when I was talking about the debentures part, technically I was telling you about the methods of redemption of debentures. Already issue of debentures I've spoken in unit number 3. Now we are talking about at the time of repayment of the debentures, what I am supposed to do or how I am supposed to redeem or repay them back. So what are the conditions that the Companies Act or the particular statute is telling me that I should do this so that, or after that only I can go for the repayment of the debentures. So the 2 important conditions are creation of the debenture redemption reserve. But here there is a catch. You need not create the entire value, that is the value of the debentures to be redeemed. That entire value you need not create, but 10% of the value which you are going to redeem should be created as DRR. That is debenture redemption reserve. Once after you have repaid back, the DRR will be transferred to the general reserve. Because the purpose of that DRR creation is over, excess amount is still lying in the DRR. I don't want to use it. I don't have any other use. So now I am going to transfer that to my general reserve. Like you are creating a DRR, which is debenture redemption reserve, you are also supposed to create the investment out of that. So the Act says the amount equal to 15%. So the DRR will be at 10% of the nominal or the face value of the debentures redeemed. Whatever debentures you are planning to repay, that face value, 10% of it you will create the DRR. That is debenture redemption reserve. After the purpose or after you have repaid the debentures, DRR will no longer be required. Then you will reverse it. You will transfer it to the general reserve and close it. The same time, the Act also requires you to do a special kind of an investment out of this particular DRR. So the debenture redemption reserve should also be invested outside. What is the amount then? That is 15% of the nominal or the face value of the debentures to be redeemed. When I talk about debentures, it means whatever debentures I want to redeem, that face value on that I'll have to consider 15%. So these 2 I am compulsorily supposed to create it at the time of redemption, before the redemption. After the redemption, what I will do, the whatever DRR I have created, I will pass an entry called as debenture redemption reserve account debit to general reserve, because no longer that reserve is needed in my balance sheet, because I have repaid my debenture holders. Now I need not have this DRR, so I am transferring it to the general reserve. Then what about investment, madam? Debentures are being paid off, so what is the use of investment? So now I am going to liquidate the investments. That is nothing but I am going to sell the investments and get it back. So DRR investment account. So once I remove this, the investment is also gone. Okay. This is at the time of or after redemption. This entries will pass. At the time of redemption, what are the entries that you will pass? First, you should create a DRR, correct? So that can be created out of P&L account. Whatever balances you will be creating, available distributable balances you will create. The P&L, from P&L you will create debenture redemption reserve, and then the debenture redemption reserve investment. You are supposed to write it in full forms. Okay. Debenture redemption reserve investment to bank. That means you are investing the amount outside. That is why bank is getting credited, because amount is going out. I am crediting the bank. These are the 2 things that you will be passing first. Then after passing the redemption entries, you are going to pass these 2 entries, which means that you are no longer wanting to have the debenture redemption reserve. So I will transfer the balance to my general reserve, and the DRR investment also no longer needed. I will sell the investment and I will get back the money. When you are investing, it is DRR investment account to bank. When you are selling it back and getting money into the business, it is bank account debit to DRR investment account. As simple as this. Okay. So, my dear students, with this particular note, we will now go ahead with the illustration number 4 in your textbooks. Okay. Now, let me share the screen to all of you. Very simple question. Okay. So here, when you look at the question, it says the balance sheet of B company, which is unlisted company other than AIFI, banking company, and HFC. So these are all financial companies which are not required to create a DRR. So exclusively in a debenture question that is related to redemption, if they are asking you, my dear students, they will clearly tell other than AIFI, other than a banking company, other than a housing finance company, which is HFC. So those wordings will be given. You need not worry or you need not think, what is this extra given to me? Should I do something? You are not required to do anything. It means that, okay, the meaning of other than means this particular company, BEE company, which is unlisted, is supposed to create a DRR, okay, is supposed to create a debenture investment reserve. So whatever questions we are going to see, we will create a DRR. We will create a debenture redemption reserve investment account also. Okay, these companies which is given to you in the brackets, they need not create. So that is why they are simply specifying that apart from these companies, you have to do that. Okay, so that is why this is coming into the picture. Now all of you please see here, equity and liabilities under share capital, I have 2 lakh rupees. Okay, now reserves and surplus, how much is the reserves and surplus? 1 lakh 20. You still don't know the breakup, so let us, don't worry, go a bit down, then you will understand. Now next you have the long term borrowings, which is 1 lakh and 20,000. And then we have trade payables 1 lakh and 15,000. Come little lower, then we find there is property, plant and equipment 1 lakh and 15,000. And then we have inventories, trade receivables and cash balances. Okay, this is the balance sheet given to us of B Limited. Now, notes to accounts, please see everybody. In the notes to accounts, even though the authorized capital is 30,000 shares, how much you have issued? Only 20,000 shares of rupees 10 each, fully paid up. There is any problem? No, madam. 10 rupees they have given face value, 10 rupees fully paid up. Then you have a P&L account of 1 lakh and 20. That reserves and surplus I told you, P&L account only. Long-term borrowings totally 12% debentures, 1 lakh and 20,000. Okay, so that is the value. Property, plant equipment is a normal freehold property, 1 lakh and 15,000. Okay. Cash at the bank 2 lakh, cash in hand is 30,000. That's all. Now all of you please see here, very, very important. At the annual general meeting, it was resolved that to give the existing shareholders the option to purchase 1 share of the face value 10 rupees at 15 rupees for every 4 shares held. Okay, this is prior to the bonus distribution. That means what? In the next point, there is bonus. So there are 2 things that is happening here. First is the rights issue. The rights issue is also given in a particular ratio. What is the ratio, madam? The ratio is for every 4 shares held, 1 share will be given. Okay. Now I will just show to you on the board what is that they are telling you. Okay. So the things that I've told is, this is B Company Limited, and in the brackets they have given other than an AIFI, banking company and HFC. The meaning is these 3 companies, no, they need not create DRR. But I taught you, you should create DRR. So that is why they are giving you specifically these 3 companies, this particular question may, whatever company B Limited is there, it does not belong to those 3 companies, which indirectly means you should create a DRR, which indirectly means you should create a debenture redemption reserve and debenture redemption reserve investment account also. That is the meaning. Or otherwise, you people make a note of it that whatever questions are coming with regard to the redemption of debentures, in every question, very simply, they will say other than these 3 companies, which means that you are supposed to create DRR. But if they give the company is either one of these, then you should specifically write no need to create a DRR and DRR investment account. Clear? So that is the differentiation here. That is one point we learned from this question. Second point, what is that? First, the company is first making a rights issue. Okay? It is making a rights issue. That means the shareholders who are existing with the company will be getting how many shares? One shares for every 4 shares held. Okay. So what are the present equity shares that is there in the question? 30,000 equity shares authorized, but only 20,000 equity shares are being issued. So 20,000 equity shares divided by 4 into 1. Why are you doing this, madam? I already explained to you in a ratio, the second number will become the denominator and the first number will become the numerator. You should multiply. So how many shares are being issued? First, 5,000 rights issue is being done. Now you tell me from the unit number 4, rights issue will be done at a zero cost. Rights issue also I will get money, madam. But the only difference is without giving to the new people or new shareholders, I will give these shares first to my existing shareholders. That's all. So what is the value? They have given to me face value rupees 10, but the issue price is rupees 15. So the first entry that I will be passing is for the rights issue. In the books of B Company Limited, the journal entries. So it will be the date column, particulars, the ledger folio, and the amount, debit and credit. Okay. Credit amount. This is debit amount. The first entry will be the rights issue. Madam, for the rights issue, what I am supposed to do? Nothing. It is a simple entry like which entry you will have. Just we can consider that this rights application is considered or it is taken in one particular installment, which is the application. So I will be first passing the bank entry. Bank account debit to equity share application. So what is the value? How many shares? 5,000 shares into 15 rupees. So 75,000, 75,000. So here the money received on rights issue. Second one will be the transfer entry because equity share application finally has to be transferred to the equity share capital. But the only catch here is the 10 rupees face value is issued at 15. It means that 5 rupees excess. It is nothing but to securities premium. It is nothing but to securities premium. So what will be the value for share application? It will come from this entry 75,000. What will be share capital? Always the face value. 5,000 shares into 10. So 50,000. What is the value of the premium? 25,000. How? 5,000 shares into 5 rupees premium, which is 25,000. So this is the second entry, which is nothing but the transfer entry made. Okay. So first thing that we understood from the question, rights issue was there. So we computed the number of shares and then we passed the entries. It is nothing like but the issue of the equity shares. But rights issue, they are just specifically giving you the word rights for you to understand that it is given to the existing shareholders. Others, all these entries will remain the same. Okay. Very good. Now we are going to go to the second thing of the question. All of you please see here. What is the second point? To issue 1 bonus shares for every 5 shares held. So now I am going to do a bonus issue also. Rights issue is over. Now come to the working note. What is the working note? Please make a bonus issue. I have so much profit and loss balance, so much reserves in my company. So now I want to give bonus shares to my shareholders. At what cost? Zero cost. So the company, from its profits and reserves already existing, it will take the money and put it in the share capital account. Now they have given you indirectly the ratio. How much you are going to do? You will get 1 share for every 5 shares held. How much? 5 shares if you are holding existing shares. You will get 1 bonus shares. That's all. That is the meaning. Now here you should be very, very careful. What was the particular shares earlier given to you in the question balance sheet? 20,000. But my dear students, before making the bonus issue, what did they do? They did rights issue. That means how many shares they have again issued on account of rights? 5,000 they have issued. So now for the bonus shares, what is the revised number of total shares? Earlier shares 20,000 I should take, madam. Whatever rights issue I have done for the period, that also I should take. Both put together 25,000 shares only. On these shares only, I should apply the ratio. Here, you will tend to make a mistake not to take 25,000 but only consider 20,000, because when you are doing it in the exam, under exam situations, your attention and everything, what will happen? You will look into the question and forget that I did a rights issue. I passed an entry. So these shares also I should include. That point you will forget. That will come only by practice. Okay. So here, now I am doing the bonus issue after rights issue. So I am considering the shares. 20,000 shares plus 5,000 shares, 25,000 shares is the total shares as of the date of making the bonus issue. Now you tell me how many number of bonus shares will be given. The number of bonus shares will be 25,000 divided by the second number 5 into 1. So it will be again 5,000 shares. Correct? It will be 5,000 shares. Now people, you tell me 5,000 shares. So what will be the actual value of the bonus issue? It will be always at the face value. So 5,000 into 10. I need 50,000 rupees now. How much I need? 50,000 rupees now. Go back to or just think about your unit number 4. When you are doing a bonus issue, what are the reserves that you will be using, my dear students? The first reserve is the capital redemption reserve. In this question, do you have a capital redemption reserve? No, it is not there. You only have profit and loss account, but profit and loss account should be touched at the last, correct? So first capital redemption reserve not there, remove it. Second, securities premium collected in cash. Is it given to you in the balance sheet in the question? No. But please see in this question, you have collected securities premium on account of rights issue. So I can take that amount, no. So securities premium account debit 25,000, which I have just collected from the rights issue. Okay, over. Then do you have a general reserve? No, madam. Then what is there in the question? P and L account is already there in the reserves, madam. So now use the P and L account for the balance. How much? 25,000. How, madam? 25,000 total. I need 50,000. This 25,000 is coming from the securities premium. So the remaining 25,000 will come from your P and L. What will be the entry? To bonus to equity shareholders 50,000. What is this? Bonus to equity shareholders 50,000. So this is the bonus shares announced. Okay. Now all of you please see, when you are paying the bonus shares, very easy. Bonus to equity shareholders account debit to the bank account. That's all. That is 50,000 and 50,000. Do you have enough bank balance? Yes. 2,30,000 is the bank balance I have. So I am first paying to these particular bonus shareholders. Clear, everybody? So these are the two things or the two adjustments that we have. First rights issue, we found out the number of shares. We understood it is issued at a premium. So we passed these two entries. What are these two entries? It is same like for the issue of equity shares, what you did. Same thing I did, but here I considered only application because I don't know in what installments it is taken. One single installment I can do. Or in your exam for easier presentation, you can do one single entry. You can combine this as bank account debit to equity share capital to securities premium in one entry you can do and complete it. Okay. You can do either ways, either two entries or one entry. Both are same. After doing the rights issue, the company is also announcing a bonus issue. The bonus issue meaning very, very simple that after issuing right shares, the shares have increased 20,000 shares plus 5,000 shares, 25,000. Now, the people who are holding 5,000 shares, I mean, who are holding 5 shares, I am giving them 1 share. So, existing shares are 25,000. How many bonus shares they will issue? 25,000 divided by 5 into 1, 5,000 shares. So, 5,000 shares into 10, which comes to 50,000 is the value of the bonus issue. From where I will take? I have securities premium because I told you the order. CRR is not there. Okay. Securities premium, yes, it is there. So I will take that value. Then we have general reserve, but we don't have it in the question. So we are not taking it. Then P&L account we have. So we have taken the balance 25,000 from there. And then finally, bonus to equity shares to bank account. We are passing the entry. Now, when we look at the third entry, this talks about the redemption entry, actual redemption entry. What is that actual redemption entry? Please see here. To repay the debentures at a premium of 3%. What is the value of debentures, my dear students? 1,20,000. On that 3% comes to how much? Can somebody tell me? It will be 3,600. So the debentures are redeemed at 1,20,000 plus 3,600. So 1,23,600 is the entry we need to pass for the redemption. But before that, my dear students, what is that I have told everybody? All of you, please see what is that I have told you. While you are repaying the debentures, you are supposed to create two things. One is the debenture redemption reserve, which is equivalent to 10% of the nominal value of the debentures to be redeemed. Here, what is the nominal value? Can we go ahead with that particular working note? Very simple working note. Whatever debentures you are redeeming, you are supposed to pass this particular creation of DRR. Okay. So the creation of DRR is very simple. I am just rubbing this. Okay. So this side, when it goes off, the third thing that we have to do is very, very simple. What is it? First one is creation of debenture redemption reserve. How much it is? The third point is the debentures are redeemed. So I told you when the debentures are going to get redeemed, you are supposed to create a DRR, debenture redemption reserve. What value? Simple. It is nothing but 10% of the value to be redeemed. So here, how much is the value to be redeemed? 1,20,000. You only told me there is premium on redemption also, which is 3%, right? But we are only supposed to consider 3% later in the entries. Only the face value will be considered here. So 10% of 1,20,000 will be 12,000 rupees, for which you are supposed to create the DRR, debenture redemption reserve. And then the second part, what you have to create is, I am also supposed to create a DRR investment account, madam. So what is the value? Same thing. 15% of 1,20,000. Please don't consider the premium. We are only bothered about the face value for DRR investment account also. Simple. Don't consider the premium on redemption. So 15% of this comes to 18,000. So, madam, I now know that I have to create 12,000 DRR. I have to create 18,000 investment out of that. Can you tell me what are the entries? Simple entries. Only two entries are there. The first thing I'm rubbing this part also. So the first point that you people have to remember, a DRR or debenture redemption reserve will be created out of the general reserve. But if you don't have general reserve, you will create it out of the P&L. That's all. So here we have P&L account, profit and loss account, debit to debenture, write the full forms. Debenture redemption reserve. Okay, so how much is the value? 12,000. 12,000. So the DRR created at 10% of the face value of debentures redeemed. In the narration, it is very important that you mention this and you write this. Okay. The second one is investment. When you are doing the investment, it will be debenture redemption reserve investment account. This is your asset. The asset value increases when you do an investment. So you are debiting it. You are crediting the bank. Why, madam, bank? Because I am investing this money outside. So I am creating this particular value. So here the investment made equal to 15 percentage of the face value of the debentures. Here 10 percentage, here 15 percentage you are supposed to write. Okay. Now, madam, what is the next thing? Now pass the debenture redemption entries. Very simple. How much percentage debentures? 12 percentage debentures. So when you are passing a redemption entry, what you should remember? I want to repay it to them. So for redemption of preference shares, what did we do? Preference share capital account debit. Why are you debiting it? I want to repay. I want to give them back the capital or the money they have given to me. So still now preference share capital or debentures or equity share capital, all of them have credit balances. So when I reduce or give back to them, it means it is reducing. So I have to debit it. Same logic here to the debenture holder. So this will be the entry normally. But my dear students, you are not giving 1,20,000 as it is. You are giving 3% extra to them, which is nothing but a loss. Whenever a redemption or a repayment is done, you can do it at par value or you can do it at a premium. In this question, it is done at a premium value of 3%. So it is a loss. Loss should be debited. Premium on the redemption of debentures 3%. So on 1,20,000, 3% comes to 3,600. What is the total value these debenture holders will be getting? The total value these debenture holders will be getting is 1,23,600. How much they will be getting? 1,23,600. So this is when you have decided to redeem the debentures. Okay. Now, madam, shall I immediately, what is the next entry which will strike to all of you? I will pass debenture holders to bank and complete it. No. Here, there is a small thing you people have to understand. After passing the entries till this, before you can pass the final entry, there are two things that you people need to understand. The debenture redemption reserve, once after the repayment, there is no purpose for that. Okay, there is no purpose for that. So what you will do, again convert the debenture redemption reserve, you will debit, transfer the balance to the general reserve. This is point number one. Now point number two, the debenture redemption investment account was created for what? To get money for the purpose of redeeming the debentures or repaying the debentures. Now you are going to repay it, correct? Sorry, you are going to repay them. So now it is the time that you sell and you get the money. Okay. So the next entry that you will be passing is, my dear students, shall I pass it this side? Do you have place? Okay. I will be passing it this side. So the first thing is sell off the investment. That is nothing but bank account debit to DRR investment account. What is the DRR investment value? I created 18,000. I am selling 18,000. That's all. No change. You need not worry if I have to add, subtract. No. I created DRR investment. Now I am selling the investment, same value. So this is sale of the investment because you need the money to repay to the debenture holders, correct? That you have to do. So this entry I passed. I now closed that same entry. Now what is pending? Now DRR is there. I need to close this entry also. So it will be DRR account debit to the general reserve account 12,000. 12,000. You are transferring the balance of the DRR into the general reserve. So you opened or created DRR, you are now closing the DRR. Okay, the next entry is whenever you have the premium on redemption, this is your loss. I told you, like for the redemption of preference shares also at a premium, this is a loss for the company. But after the repayment of your debenture holders, will this account or should this account be there in your books? No, I am closing the debenture holders account. So this amount of the premium on redemption also, I have to write it off. How will you write it off? From your P&L account. So here I will pass this particular entry and show to you. P&L account debit to the premium on redemption. So it comes to 3,600 and 3,600. So this is writing off of the loss. Whatever you are having it as the loss, you are writing it off in this particular entry because the share or the debentures are redeemed at a premium. Okay. Now the final entry. Now please tell me, madam, still now I have to do so many other entries. No, you have finished this particular question. So the final entry is payment to the debenture holders. So it will be debenture holders account debit to the bank. What is the value? 1,23,600, 1,23,600. This is the last entry. So my dear students, if you are getting a question from the debenture redemption, it can be this particular or this type of a question that you are getting. What, madam? How, madam? Very easy it is. First thing, you had a rights issue given to you in the question. So you will understand from the ratio how many shares are issued, what is the amount of rights issue. Here the rights issue is being done at a premium. So we passed the two entries, that is bank account to equity share application, and then we had equity share application to the equity share capital and to the particular securities premium. Okay. And then we went ahead with the bonus issue. In the working note, you people have to take care that the bonus issue, before doing that, you had a rights issue. So 20,000 existing shares plus rights issue. This is very, very important. So 20,000 plus 5,000 is 25,000. Out of 25,000, the bonus ratio was 1:5. Again, 5,000 shares bonus issue I have done. So total value of the bonus issue is 50,000. That from which reserves I gave? I don't have anything else apart from P&L. But securities premium is coming in the earlier equation or the earlier entry. From that I am taking the securities premium 25, remaining from P&L 25. And then I passed the bonus entries also. The next entries is with regard to the redemption of the debentures. So the rule here is create a DRR. Before redeeming the debentures, you are supposed to create a debenture redemption reserve to the extent of what? 10% of 1,20,000. Why 1,20,000? Face value. Even if there is redemption, don't bother, take the face value. So 12,000 DRR I should create. Same time, DRR investment account at the rate of 15% I have to create, which is nothing but 18,000. So that, how will you create? P&L account debit to debenture redemption reserve 12,000. Debenture redemption investment account to bank 18,000 you have done. Then what will happen here? You are supposed to pass the redemption entries like how we passed in preference shares, the same way. Here it will be 12% debentures account debit. Premium on the redemption of debentures account. This also debit because it is a loss to debenture holders. Okay. 1,20,3,600, 1,23,600. But before passing this last entry, there are two things that you have to do. First thing, sell the investment, get the money. So whatever investments you have done as DRR investment, now reverse that, get your bank inside. So whatever entry you pass here, reverse entry you should pass here. That's all simple. And then whatever entry you passed here, that also I am reversing it. But the only difference is I am taking it to general reserve instead of P&L. Debenture redemption reserve will be converted into general reserve. That's all. That will be this entry. And finally, already we have learned this concept. Whenever you are redeeming at a premium, it is a loss. That loss you should take it from your P&L account. So this entry I am passing. And finally, I am redeeming this particular debentures. Clear, everybody? So I'm taking one doubt very quickly from Gauri and then Kavita. Then I'll go back to the next particular topic. Gauri, please tell me what's your doubt? Yeah.
Ma'am, DRR ma'am, entry ma'am. Creation of DRR ma'am. They give 10% ma'am.
Yeah, 10%. Now, what is your doubt?
In study modules. In study modules, there is no 10%.
There is no 10%.
How to create DRR, ma'am? We
There
have
is 10%.
to.
See here. You need not ask. That is the rule that you have to do. Okay. Are you seeing the screen now?
10% it is the rule, ma'am.
Correct. 10% is the rule for DRR. DRR investment, it is 15%. That is what I told you at the beginning of the session, no?
Sorry, ma'am. I joined very late, ma'am.
No problem, Gauri.
Then also 15 also that is the rule, ma'am.
Correct. That is also the rule. This 15% is the rule for investment. 10% is the rule for DRR. That's all.
Whether they give or not, we have to take.
Correct. You have to take it. That is an assumption. Okay. That is the assumption which the law says you are supposed to create this particular reserve and the investment before you can redeem the debentures. Okay.
Okay, ma'am. I have one more doubt, ma'am.
Yes.
As like a redemption of preference share, ma'am. The sources for redemption of debenture, ma'am.
Correct.
Same, ma'am.
Same as in what you're asking, this entry or the sources?
Sources for redemption of debenture, ma'am.
Okay.
In previous classes, we use
either equity shares are issued or you are creating a CRR, right? Here, similar concepts are followed, but everything is not the same. In preference shares, we issued shares, okay, new equity shares, and a portion was there from your undistributed profits, and then we did in depth of combination of both. But here, compared to the preference shares, it is very easy. You need not compute the number of shares and everything. The simple logic here you need to understand in case of redemption of debentures is creation of these two. This is very important. Entry is the same like in the preference shares. The sources, every time it is not the same. Okay?
Okay, ma'am. Then why we transfer DRR into general reserve, ma'am?
Because after the debentures are being redeemed, you are repaying back the debentures. There is no use for that account. Like in preference shares, CRR, we left it. It was there in the balance sheet, correct? But DRR should not be there. It should be converted into general reserve. That is the rule.
Okay, ma'am. Thank you, ma'am.
Thank you, Gauri. Kavita?
Hello, ma'am.
Yes, Kavita.
Ma'am, I have doubt or confusion about two concepts.
Okay.
Regarding DRR creation. The amount which we have to consider only face value, and afterwards that the premium is paid and charged to profit and loss. Why we have not consider face value plus premium when creating DRR?
Okay, coming back to the point, yours is a valid doubt, but here your law, it says always when creation of CRR also, creation of DRR also, always the face values are concerned. They are not bothered about what happens to the premium. If there is a premium, it is like a one-time loss. Every time I need not have a premium. So this is like an exceptional cases. It might come sometimes, it might not come sometimes. So What I will do is whenever premium is coming, I'm not going to put that amount in the DRR calculation, but take it from P&L. So that is a general rule. Here all it goes by rules only. You are telling this can also be added and taken, no? No, because as per the rule, you are supposed to create this 10% like that. Here only face value should be considered. That's all. For CRR also the same thing. When we did the capital redemption reserve also, we took the face value only. Nowhere we considered the premium. So that is the rule. Okay.
Okay. Ma'am, little bit clear to concept. Why we are creating DRR?
Why should you create DRR? Why are you
Yes.
creating capital redemption reserve? You tell me. CRR, why did we create?
To secure the
Preference
the
shareholders.
holder or preference shareholder.
Ah,
Okay.
so if the money is not there, for that purpose you created, correct? Here
Yes.
also for the same purpose they are creating, but they are not taking the entire value. Why you know? Because debenture holders, the debenture money that we are getting inside is like a loan for us. Okay.
Yes.
So we will
Yes.
always be very, very ready that after particular time we have to repay the loan. Correct?
Okay.
So we will be having enough secured cash. So with the mind or with that intent of it is a loan for us, it is not capital, it's a loan for us. The company will always be alert. So even in that case, for protection of the debenture holders, we are still creating DRR, not to the entire value, but only to 10%. Okay?
Okay. Means don't bother about the premium amount. Means
Don't take the premium amount, only face value.
okay. Okay. Thank you. Thank you.
Thank you. Now please come back. Now we will be looking at one more question. Now the illustration number 1. Okay. There, no, it is very, very, very simple. They have not asked you to pass the journal entries, but in illustration 1, they have asked you to just open the accounts, the ledger accounts and show. Okay. So we will be doing this illustration number 1. You people have nothing to worry. Now opening the ledgers, apart from passing the entries, it might seem a little bit, what is this, where is this going and all of this, but it is quite simple. Okay. Now we will be doing the illustration 1, after which we will be going to the exam questions. Okay. Because illustration 2 is similar like to the illustration 1. So you people can do that, no problem at all. So in the illustration 1, very easy question, we will now see the question. That is also a same question. So if you want, we can first pass the entries. Then it will be easy for you people to do the accounts also. Or we can do this illustration number 2 also. This seems a little bit nice. Okay. So let us see. Okay. Del, you have raised your hand. Somebody has raised the hand. Just a minute. Somebody who is Del. Yeah. Please ask your doubt.
Ma'am, I have a doubt about bonus issues.
Okay, please.
In this particular illustration number 4.
Okay.
Can you please explain me?
Very simple. What is bonus issue? You tell me. Bonus is a benefit or it is a amount for the shareholders? Or they have to pay something. What is bonus issue?
It is a benefit.
Yeah, it is a benefit to the shareholders, meaning the company is giving extra shares to the shareholder without them paying 1 rupee also. Okay. Now, what is your exact doubt? How we calculated the number of shares of bonus issue? Is that your doubt?
Yes.
Okay.
Yes, ma'am.
Simple. Existing shares, how much is there in the balance sheet given to you already? Issued, subscribed capital. How many equity shares are there?
20,000, ma'am.
Very good. You made, before doing the bonus issue, did you issue the shares? Some other shares have you issued? Look into the question and tell me.
Right issue share, ma'am.
How many shares you have issued?
5,000 right issue.
Yes. So 5,000 shares you have issued. Correct? So existing shares were 20,000, but you did a rights issue due to which the 20,000 shares, they would have increased. Correct? Because you issued the 5,000 shares. Am I right? So what is the total number of shares now? For bonus issue, to calculate the number of shares, what you will consider? How many shares you will consider? You will consider 20,000 plus 5,000 because the 5,000 have also become your shareholders. So 25,000 is the total number of shares you are going to consider. Now, what is the ratio for bonus issue? It is given to us clearly that for every 5 shares held, I will give 1 share as bonus. Correct? So now on 25,000 shares, you should apply this formula. How are you going to apply 25,000 shares divided by 5 into 1? Correct?
Yes.
So how many bonus shares you will get? You will get
5,000.
that is clear to you now?
Yes, ma'am.
Okay.
Thank you.
Yeah, thank you. Now, please, Gauri, I'll take your doubts a little later, okay? Because I want to complete this because I want to do all the exam questions, okay? I want to do the exam questions to all of you. Then it will become easy for you, okay? Now, all of you, please see illustration number 2. The following balances appeared in the books of Paradise Limited, unlisted company other than. I told you for everything, this wordings will come, okay? Meaning is you are supposed to create the DRR and DRR redemption, DRR investment account you are supposed to create. Okay. Now all of you please see here 12% debenture 7,50,000 is there. Already a DRR to the value of 25,000 is existing in the books. DRR investment made is 1,12,500 which is represented by 10% 1,125 secured bonds of the Government of India. That means 1,12,500 they have invested into the bonds, government bonds. That's all. That is the meaning. Annual contribution to the DRR was made on 31st March every year. On 31st March 2022, the balance at the bank was 75,000 before the receipt of the interest. The investments were realized at the par for the redemption of debentures at a premium of 10% on the above date. You are required to prepare the following accounts: debentures account, debenture redemption reserve account, DRR investment account, and the bank account. Okay, so this much you are supposed to do. Now, madam, what is this question? Everything is there together. How will I do it? Very easy question. Simply, first thing is let us pass the entries in the books of Paradise Limited. So it becomes easy for you once you pass the entries to post them into the ledgers becomes very, very easy. Okay, everybody with me? So first what is happening? There is an existing balance. The debenture balance is already there at 7,50,000. You are wanting to redeem it at a premium of 10%, correct? So 7,50,000 the debenture value, 10% premium if you add 75,000 will come. So both of them put together 7,50,000 plus 75, you will be getting 8,25,000 rupees. I have to repay it. Clear till this? Now before that I told you, you are supposed to create what? The debenture redemption reserve. What is the value? 7 lakh, only the face value. 7,50,000 into 10%. So 75,000 I am supposed to create my debenture redemption reserve value. Clear everybody? What is the value that I have to create? 75,000. How madam 75,000? It is 10% of it madam. So that is why I am creating this particular value. Okay. Now all of you please see what is 18% of the 7,50,000. This is for the DRR, correct? Now debenture redemption reserve investment. Debenture redemption reserve investment should be taken at which percentage? I told you 15%. So now madam, if I calculate 50% on 75 lakhs, am I getting that value? Yes. So 7,50,000 into 15% gives me 1,12,500. Already the investment is made. So I need not create anything extra. But when I come here for the DRR, I need 75,000. But already the balance that is existing is 25,000. So current year, I should transfer 50,000 to my DRR. What should I do? Current year, I should transfer 50,000 to my DRR. That's all. The point that you people need to understand is, if you have not created, then you should create in the current year. But here already there are balances. So for the DRR, debenture redemption reserve, we have 25,000 as opening balance. So the extra of 50,000, I will create it now. I will pass an entry now. Then, my dear students, for the DRR investment, should you create it? No, already the same value, I have made the investment outside. So, no need to create it. Okay. So, I no need to create that particular thing now. So, the first thing I will have to pass the entry is for my DRR, correct? So the debenture redemption reserve of 50,000 should be created now. From where will I create this particular 50,000? Here I will usually create it from the P&L account. I will be creating it from the P&L account. Okay. So it will be like this. Just a minute. What am I supposed to do when I'm creating the 50,000? I told you DRR will be created from the P&L account. Profit and loss account to the debenture redemption reserve. So which comes to 50,000 and 50,000. Okay. So this is the first entry, creating DRR at 10% of the face value. Madam, it is 75,000. No, already I have a balance of 25,000. So I am not creating anything additional, madam. I am only doing this entry for the differential value. Okay. Now clear? Now pass the redemption entries. What will be the redemption entries? What is the percentage of debenture? It is 12% debentures, correct? 12% debenture account debit. What is the face value? 7,50,000 to the debenture holders. Okay. To the debenture holders account. But you have a premium on the redemption of debentures. Correct? So that is how much? At the rate of 10%. So 10% on 7,50,000 is 75,000. So the total value comes to 8,25,000. So this is the first redemption entry. What is that? First redemption entry. But I told you, before you can pass the final bank entry, what you are supposed to do? Close two accounts. What are those? DRR, I should transfer the balance because no longer it is needed. Over. The purpose of creating DRR is over. So the first entry will be DRR account debit to the general reserve. Okay. How much will be the value? The same value or no? 75,000 because already opening balance 25,000 is there. And I created 50,000 for this now balance. So total 75,000 is there, which I am transferring to the general reserve. Transfer to the general reserve, which is 75,000. Okay, this is clear. Now I am going to do what? Sell these investments. So 1,12,500 I am going to sell. I have not passed an entry for investment. Why? Already I have invested. It is there in the books. Now I have to close the account, sell the investment and get the things here. So it will be bank account. I am going to debit to the, what is that? Debenture redemption reserve investment. 1,12,500, 1,12,500 I have already redeemed. Okay, I have already redeemed. So this is also over. I have bought it. I have also redeemed it. But my dear students, there is one thing here that you people have to remember. One thing is that there is interest. Let me show it to you in the particular books. What is there? Then you will understand. All of you come here. Here it is the DRR investment of 1,12,500 represented by 10% secured debentures. That means the 10% on the bonds, whichever you have invested, the 1,12,500, on that you will be receiving the interest also. On that, what you will be receiving? The interest also. So you should record the interest entry. How will you record? You will receive money. It is like your income. So bank account gets debited. Okay. Bank account gets debited, and then you will be receiving interest on the investment. Okay. You should take it to the bank account directly. Madam, what is the investment, madam? Or what is the interest? How should I calculate the interest, madam? Simple. 1,12,500. This is the actual face value into 10%. Why, madam, you are taking for the full year? Because the debentures are redeemed at the end of or on 31st of March. So the balances in the books are on 1st of April. 1 full year I had the investment. Correct? So what is this? This 1,12,500 I invested in the year beginning, on which 10% interest I am eligible to get. For that I am passing the entry here. Then what is the last entry, madam? I should pass. Simple. You are supposed to pass the redemption entry, which is nothing but the debenture holders account debit to the bank account. How much is the value, ma'am? It is 8,25,000. 8,25,000. That's all. I have passed all the entries. Now, can we go ahead and do the particular accounts? Can we open the accounts? Simple. Very, very simple. Shall I show you everything? Simple accounts? Yes. Now the first thing is, I'll show one by one account here. They have asked us to open 5 accounts. Okay. So the first account they have asked us to open is the debenture account. What is that? It is the debenture account. Okay. Now I am opening 12% debenture account. All of you should now, when you're opening the ledgers, be very clear about what is the nature of that account, whether the opening balance will come on the credit side or debit side. Now, debentures is a long-term borrowing. It is a loan. So, you will have a credit balance, correct? You will have a credit balance. So, on the credit side, I will write by balance brought down. What is the opening balance given to us in the question? 7,50,000. Opening balance already there? Yes. Now in this entry, I am talking about 12% debentures. I am now transferring it. I am debiting it. Correct? If you debit this particular entry or this account in the entry, you should go to the debit side. And then write what? To the debenture holders. To whom are you paying? To the debenture holders you are paying. What is the amount that I am supposed to consider? The amount that I am supposed to consider will come at 7,50,000. How, madam? 8,25,000 only no should come? No. What is straight to this value only you should take, because you have opened debenture account. Okay. Now you should remember the basics of how to post an entry into a ledger. Okay. If there is a compound entry, you should see the amount direct to this particular account. So 7,50,000 only will come. But the name you will write the opposite account, debenture holders. So this and this balanced over. Finish. So 12% debentures opening balance was 7,50,000. I have now transferred that because I am repaying to the debenture holders. No, I have transferred that balance to the debenture holders. So this is the first account that they have asked me to open, which is 12% debentures. What is the second account they have asked me to open? Debenture redemption reserve account. Correct? So now debenture redemption reserve account. What is this? This account is your reserve account. Reserve account is your liability. It will have a credit balance. Okay. So on the date of opening, I had a opening balance of how much? 25,000 already there in the book. So I am posting it on which side? I am posting it on the credit side. Why? Reserve is a liability. It will have a credit balance. Now go to the entry. In this entry, DRR is coming. Which side? DRR is getting credited. So I have to credit it, but I will be taking the opposite. What is this? From where are you getting the credit? From P&L account. What is the value? 50,000 is the value. Correct, everybody? Now DRR is coming in this entry. DRR is coming in this entry also. So now post this entry here. What is this entry? DRR is getting debited. When you get debit, go to the debit side. Which account you are debiting and taking the value? To the general reserve. So the 75,000 rupees is now getting transferred here as 75, because in the entry, please see, 75,000 you have written, no? So 75,000. So this account also is closed because credit value, debit value matching. I have just posted the entries. Opening balance I have taken. I have also taken the particular transfer during the year 50,000, credit 75. Now after debentures have been repaid, I don't want the account. So I have transferred the balance to the general reserve. So credit and debit both are matching equal. So this account also is over. Clear? Now the third account, simple account, debenture, redemption, reserve, investment account. Okay. When I talk about the word investment, asset or liability, it is my asset, madam. Okay. Asset will have a debit balance. Already in the books, I have opening balance. So it is an asset. Opening balance will come on the debit side, 1,12,500. Already there, madam. Then what I am doing it with this current year? Which entry it is coming? Here it is coming, madam. I am crediting it. I am selling it. So what is the entry? By bank. How much? 1,12,500. I have balanced and closed this also. Debentures, I told you, once you are repaying, close everything. So here also I had the balance. I sold the investment. Finish. Simple, madam. Nothing more, nothing less, madam. I did not do anything else. Now what is the next entry they are asking? The next entry is nothing but the debenture holders account. Okay, that is this account. Shall we open the debenture holders account? Bank account, a little elaborate we have to do, that I will show you. First, we'll open the debenture holders account. What is coming? Debenture holders account in which entry? This entry. Debenture holders is getting credited. Correct? But there are two accounts that is getting credited. So I am passing like this. You don't have any opening balance. Directly only this entry I am posting. So it will be 12% debentures, which is nothing but how much is the value? 7,50,000. And then by premium on redemption. How much is this? It comes to 75,000. Okay. So this is the total. Now look at this entry. In this entry also debenture holders is coming, but they are getting debited. So on the debit side, I will write bank payment of 8,25,000. So this account also is balanced. So debenture holders account I opened, I transferred the capital and I paid to them. Over. I closed this account also. No major thing is there already. All the accounts I have closed. Very simple. Debenture account, percentage debenture account, DRR account, DRR investment account, debenture holders account. What is the one account that is left? Bank account. This you should be a little careful. Okay. Now what I will do is I will now rub off this side and show you the bank account. Okay. That needs a little more space. Not so much space, but little more. That's all. So here I am going to take this as the bank account. Okay. Now the bank account I am doing. Now bank account, you tell me, is it your asset or liability? My asset, madam. So it will have a debit balance. Okay. Do you have any opening balance of bank? Yes. As on 1/4, there is an opening balance of 7,50,000, which is given to me in the question. So in your question, they told opening balance 7,50,000 is there. So I am taking this particular opening balance. Okay. Now all of you please see, during the year where bank account is coming here, it is coming in these two places. What is the first entry? I have sold the investment. So there it will be to DRR investment account. How much I have sold the value? 1,12,500 I am posting it. So I have sold the value. I have got it. So this amount of 1,12,500 I am showing it on the debit side. Simple. Okay, madam, over. Now where is the next? This account, this entry is there, madam. So the interest that I am receiving will go into the bank account to interest on the debenture redemption reserve investment. How much is the value? 11,250. How, madam? I already showed you how the interest has come. That I am showing it as my receipt. Then come to the last entry here. Also bank is there, but bank is credit. That means you have paid. Whom you have paid? The debenture holders. How much you have paid? 8,25,000. Correct? Only for the bank there will be a balancing figure, because this total debit side total is more, credit side total is less. So you will be getting by balance carried on, which is the balancing figure. Okay? By balance carried on, balancing figure. What is the balancing figure that we have here? Can we see? Okay, it comes to the particular 48,750 is the value. 48,750. This total comes to 8,73,750. 8,73,750. That's all. I showed you 1, 2, 3, 4, 5, 6. 6 entries, and we have opened 6 accounts for all those entries put together. What are they? First, we saw percentage 12% debenture. Then we saw DRR account. Then we saw DRR investment account. Then we saw the debenture holders account. And then we saw the bank account. That's all. As simple as this. So with this, my dear students, we have successfully completed the company account. So I was thinking one class earlier I will complete, but technically for explaining it in detail and also taking your doubts then and there, it took this particular time. We are having quick 1 hour left with us, which I will be completely utilizing for doing your exam questions. Okay. Now, before going to that, very quickly, I will take your doubts with this concept and then I'm going to the particular exam questions. Yeah, Gauri?
Ma'am, it is a redemption of debentures chapters, na ma'am.
Correct.
Then why right issue, bonus issues?
That's a good question. When you are doing redemption of debentures, nowhere they are telling that you are not supposed to do rights issue. Okay. You just that you people need to understand whether you have understood the concepts or not. They are touching about shares also. They're touching about the debentures also. But technically under redemption, it is only redemption of debentures that you have to make a note of. Okay. But in the question, they will not say this unit only I will ask, that unit only I will ask. For you or for them to test, they will combine all the units and give it to you. No problem. Then also you can do it, no?
Okay, ma'am. Thank you, ma'am.
Thank you. Next, Kavita. I'm going in line, okay? Yeah, Kavita.
This is one kind of lengthy question. How much mark will be?
Now I will be talking about the exam questions here. From the chapter 11, whatever I have taught you people, you will be getting exclusively 25 marks questions. Okay? 2 questions will come, which will always be 5. In the 5th question, the second portion or the third portion, you will get for 10 marks. 6th question, A part, you will get for 15 marks. That's what I'll show you now and I will discuss. Okay?
Okay, but ma'am, if we ask to prepare ledgers, then no, it is compulsory to present the ledger journal entries also in answer sheet. No. Because it is quite time consuming. We can prepare it.
You can. Your thing is only ledgers. Why I did the journal, you know. If I directly teach you the ledgers, you will not understand. Now when I did the journals and posted there, you understood it easily. When you are preparing it, do only ledgers.
We can also prepare a rough work only. Means we don't have to show.
No, only ledgers. Yeah.
Okay.
Yeah. Thank you. Somebody 1 plus. Did I unmute you? Why are you not getting muted? Why are you not getting 1 plus? Just a minute. I'm not able to unmute you. Okay. I will take the doubt of Shafi. Shafi. Now talk, Shafi. Yeah. You're able to hear?
Audible, ma'am?
Yeah. Audible. Yes, tell me, Shafi. There is a signal issue, I guess. No, your voice is getting broken, Shafi.
At the time of redemption of debentures. Hello?
Yeah. I'm able
the
to
investment they purchase and sales same day. Alla.
You will sell.
Not audible?
Yeah, yours is on and off. Now again, tell me, Shafi.
Debenture is
estimate.
Yeah.
Internet.
You tell me. You're there? Okay, until then I'll take your doubt. One plus, I'm unable to unmute. Manish, are you there? Okay, I'm not able to unmute them. Just a minute. Gauri?
Yes, ma'am.
Yeah, you tell me. You raised your hand again. Do you have a doubt?
Yes, ma'am. I have a doubt on redemption of preference share, ma'am.
Okay, what is that?
Illustrate practical question 1, ma'am. First, ma'am.
What's your doubt?
Equity shares of for redemption 3,000 equity shares. We are issuing 2:2 bonus shares, ma'am.
Okay. 2:2 is 1:1.
Number of bonus shares comes 1,200, ma'am.
Okay.
In study models, this shows 12,000 bonus shares, ma'am. That's why I'm quite confusing.
Okay, that particular question I'll take. I'll just look at that particular question and come back. Okay. That's your doubt?
Okay, ma'am. Thank you.
Okay. Fine. Now there's one more person who's waiting. I'm not able to unmute. 1 plus. Let me do even the questions, okay? The exam questions. You people keep asking me again and again. I'll be stuck here only. Okay, Gauri and Kavita. Who is this 1 plus? I'm not even able to unmute them. Ask to unmute. Yes. Come. Or at least enable the chat, no? Manish, are you there? Kindly enable the chat. Okay, so okay, let me go ahead and show the question paper to all of you. Just a minute. I will be showing you first the June question paper, so people will get a clear idea of what will be asked and what will not be asked. Okay, so let me just go ahead and show you the paper. Let's not waste time so that it becomes easy for us. All of you please see. So this is how a paper will look like, your particular accounting paper that came in June. Now you will have this particular question 1 which will be compulsory. Right, everybody? All of you are looking ahead. So from the remaining questions, question 1 compulsory you have to attend. And apart from that, the remaining questions, there'll be 5 questions out of which you will have to attend 4 questions. So there will be one particular question which you can put in choice. Okay, so now don't ask me, madam, which concept can I leave it in choice, this concept or that concept? No. Accounts is a very, very easy concept, provided you understand the concept and you start working out. Okay, so you're supposed to do that particular thing. So the first true or false starts with this. You will have 6 true or false questions. Each true or false will contain 2 marks. Okay, so 12 marks will come from the A portion. So what are you expected to do here is very simple. Read the statement. If you feel that the answer is true, write true. Or if you feel the answer is false, write false. But reasoning is very, very important. If you don't write the reason, then marks will be cut. So 1 mark for writing whether true or false and 1 mark for writing whether it is whether it is, what is the reason behind that. Okay. And then please see here in the B question, you will again get a theory. Define accounting policy, and this comes from your chapter number 1, your theoretical framework. Okay, that comes for 4 marks. So 12 plus 4, 16 is done. And the next 4 marks. So your question 1 carries 20 marks in total. And then you will have it from the particular journal entry. So all of this will be tested. Your 1, B and C will come from your first theoretical framework, where they'll ask you to prepare the journal entries, or sometimes even you can have the chapter number 2, wherein you also have the rectification, your preparation of cash books, all that can come. So 4 plus 4 plus 12, which gives you 20 marks. Okay. So now the other parts and all, if you can see the question number 2, question number 3, they will come the chapter wise only. So you will be having the rectification of errors and the BRS that's coming up. And then you have the depreciation. See here, this is an NPO question. Vandana Sports Club, that is 3A. So this full question has come for 12 marks. If you are getting to prepare, or they're asking you to prepare income and expenditure account, balance sheet, you will get a full question for 12 marks. This was 3A. And then B came from partnership. Okay, if that is 12 marks, this will be there for 8 marks. So it will be relatively easy, but don't tell me, madam, we are supposed to write it is quite lengthy. Yes, it will be lengthy, your accounts paper, because you are required to prepare different kinds of accounts. So you people have to practice really, really well. If you start practicing and then doing the question several times, you will get a hold on the questions. Okay. So that was 3. 3A was NPO. 3B was from partnership. 4A is NPO. 4A is partnership. I'm sorry. Anu and Manu are carrying partnership. So this question has come for 12 marks. And here itself, single entry system has come in the B question. Okay. That has come for 8 marks. So this is your question number 4. Now come to question number 5. In question number 5, 5A is from inventories. So here in 5th question, they can ask you from inventories, they can ask you from BRS, or they can also ask you from rectification of errors. Okay. So find out the value of inventory. So this is an inventory question which has come for 5 marks only. Now all of you please see, in the 5th question, in the B portion, there is again you have internal choice. So this is opening work in progress, opening raw material is nothing but manufacturing account. That is chapter number 7, unit 2, manufacturing account, how to prepare is there. No, from there it has come. You can do either the manufacturing account or you can do the BRS. This is the second question. So here internally also you have a choice. So whichever concepts you are really very thorough and you know that you can crack it, please do that. And then all of you please see the next question here. Following is the abstract of balance sheet of Happy Limited. The same question. Okay. So here we have issued and paid up capital is so much. Okay. 9 lakh, but we have calls in arrears. 10,000 equity shares have not paid. Again, we have second type of equity shares on which 10 rupees is being the face value. 4 rupees cash is paid up. That means what? 6 rupees is not yet paid. So now what are you supposed to do, my dear students? Make that final call. And then there are various reserves. Now what are they asking me to do? This is how many marks question? All of you please see. This is a 10 mark question. I told you, right? In the question number 5, the second part of it you will always have from your chapter number 11. So what are they doing? All of you please see here. Simple question. Dead easy question. Okay. So what is it? On 1st of April, you have different reserves that is there in the question. On 1st of April, the company makes a final call. So on these 40,000 shares, it is making the final call of 6 rupees. Okay. The call money is received. So dates are given when you are passing the journal entries. Very, very important to write the dates. Okay. Now the next one, on 1st of May, the board of directors decided. So after making the final call, what did they decide? To forfeit the shares on which final call is due. That means this 10,000 come up. This 10,000 equity shares which they have not received 2 rupees, they want to forfeit it. So forfeiture entry will come. Then to reissue the forfeited shares at rupees 11 each fully paid up. Forfeiture you should do. Then you should do the reissue entry also. Reissue is done at 11 rupees. So 10 rupees value is given at 11 rupees. It is done at a premium. Okay, madam. Now the next one. To issue fully paid bonus shares. So after doing the forfeiture and reissue, now again you are going to issue fully paid up bonus shares in the ratio of 1 fully paid up bonus shares for every 2 shares held. So 1:2 is the ratio. And to use minimum balance of P&L. So when you are issuing the bonus shares, what are all the reserve you will touch, ma? All of you please see here. Capital reserve realized in cash. Will you take it? Yes. Capital reserve usually will not come, but if they have given you the word collected in cash, you will utilize the capital reserve. Next, all of you please see capital redemption reserve. Yes, this is always, it will come. It is favorite. Then securities premium, will it come? Yes, it will come. General reserve, will it come? Yes, it will come. And finally, P&L account. Yes, the balance what we have to see is through the working note. Can we go ahead and do this particular question, all of you? Will you see? I will work it out very quickly. Very simple question. They have given you the balance sheet of Happy Limited, okay? And they are telling you first make the final call. What will be the first entry? Making the final call entry. And what will be the second entry? Forfeiture entry. So there is a particular number of shares on which the amount 2 rupees is not paid. So what I am supposed to do? I am supposed to forfeit or cancel those entries. So June 24 paper, question number 5C is coming from your chapter number 11. This is with regard to your unit number 2, issue, forfeiture, reissue. So shares issue, forfeiture, reissue is coming. Unit number 2. Unit number 4, bonus issue is also coming. So I told you always there will be a combination. You cannot expect them to give only from this particular unit or that unit. Don't have to worry. It will be very, very easy. The first entry is nothing but when you make a final call on 40,000 equity shares at the rate of 6 rupees, correct? So that particular thing you can write it as first will be the transfer entry. So equity share final call. You don't know what call it is. So you can use the name final call account debit to equity share capital. How much is the value? 40,000 shares into 6 rupees. So 2,40,000 and 2,40,000. This will be the first entry. Dates are very, very important. 1st of April 20 or 24. What is the date? 1st April 24. Okay, this is the first entry. Write the narration being the transfer entry made. Okay, being the transfer entry made. Next, on 30th of April, you are receiving the money. When you receive the money, you will be recording bank account debit, equity, share, final call. Equity, share, final call. It is 2,40,000 and 2,40,000. So this is amount received already on the final call. Over. So now I have made it fully paid up. Over? Yes? Now the next thing is, my dear students, you need to pass entries for what? Forfeiture. Because there are 10,000 shares that have not paid. How much? 2 rupees they have not paid. Okay, shall we pass the forfeiture? What will be the forfeiture entry? What is the date of forfeiture? On 1st of May. Date is very important. 1st of May, forfeiture entry will be, I am cancelling the shares, so share capital account will be debited. 2 shares forfeited and to the calls in arrears. Correct? Already calls in arrears are given to us in the question. All of you please see. 10,000 shares. What is the face value of the share? Share capital always face value. So 10,000 into 10, 1 lakh is the face value of the share. Okay. How did you do that, madam? All of you please look into your books. I am not doing anything, or this particular screen, if you see 10,000 equity shares, each fully paid up. So 10 rupees is already been called up. So 10,000 into 10 gives me 1 lakh. How much he did not pay? 20,000 he did not pay, which is nothing but in calls in arrears, it will be 10,000 shares into 2, which is nothing but 20,000. Clear, everybody? Now, how much he would have paid? He paid the 8 rupees. Out of 10 rupees, 2 rupees he didn't pay. 8 rupees he paid. So 80,000 is shares forfeited. So this is 10,000 shares forfeited. This is the third entry I have passed. On 1st of May, they decided to forfeit, and immediately what they have done on the same day, they have reissued. When you reissue, it is nothing but bank account debit to share capital, correct? Share capital always the face value. So 10,000 shares they have reissued. But what is the face value? 10 rupees. So 1 lakh is the value of the reissue. But at what rupees I have reissued? At 11 rupees I have reissued. So 1 lakh 10,000 I have got. So the excess of 1 rupee is securities premium. How much it is, ma? Securities premium of 10,000. So this is reissue narration, very important, of 10,000 shares at 11 rupees per share. So here there is no loss, that is not less than 10 rupee, more than 10 rupees they have reissued. So here the shares forfeited account is not coming. So finally after this what you have to do? Transfer the shares forfeited amount to the capital reserve, because reissue is done. I have closed that particular defaulting shareholders account. So the third entry will be the shares forfeited account. So no longer shares forfeited account should be there. I am transferring it into the capital reserve of how much? 80,000. 80,000. So what is the narration? Balance of shares forfeited transferred to the capital reserve. Okay, you people have to write it in full forms. Don't use short forms, not accepted. Okay, now come to the working note. Madam, I have now made the final call over, madam. I have forfeited the shares, madam. I have reissued the shares, madam. Now I am going to do a bonus issue. So come to the working note. What is the bonus ratio? My dear students, for every 2 shares held, I am giving 1 share. Now, what are the shares held? Can you tell me, all of you? So equity shares, first one was 90,000, correct? The balance sheet may they have given you, all of you please see here. In the balance sheet, the value given to you is this. All of you please see here a little up. All of you see here, first 90,000 shares are already there. Then you also have 40,000 shares to you. Now all of you please see here, very, very important. 90,000 shares are there. But you have forfeited how many shares? I have forfeited 10,000 shares. The meaning of forfeiture is what? I am removing. I took back my 10,000 shares. But what did I do in this entry? I again reissued them. So these 10,000 shares, once again, I have reissued. So this much plus 40,000. There are 2 kinds of shares. One is 90,000. One is 40,000. So now what will happen? This will get cancelled. It will be 1,30,000 shares again. Now bonus shares is half of it. That is nothing but 1,30,000 shares divided by 2 into 1. 65,000 shares at the rate of rupees 10 each. So the value of bonus issue comes to 6,50,000. This is the step number 2. Very, very important. Bonus issue. I know it is given to me in the question, but here you should be careful because the question has forfeiture and also reissue. So in this question, my dear students, 10,000 shares I forfeited, 10,000 shares I have reissued. When I do this, there is a null effect. But in some questions, what happens, they can forfeit the particular shares and not reissue. In that case, this will not come. So the shares will get reduced. So always you people have to logically think what is happening. Okay, 90,000 shares were there. Out of that 10,000 did not pay. I took back the shares. So I should minus it. Again, did I reissue? Yes. So I should again bring them back. I should plus it. Okay, then 40,000 shares I made it fully paid, that also I will consider. Doing all of this, I got 65,000 bonus shares at the rate of 10 rupees each. What is it? 65,000 bonus shares at the rate of 10 rupees each. Very easy. And then 6,50,000. Now the question comes, what and all reserves I should use, madam? Go back into your question. It is a quite simple question actually, but you people have to be very, very careful. Now, all of you, please see, capital reserve in the balance sheet is how much? 60,000 given to us, correct? So first, we will not go with the capital reserve. Let us go to CRR. The first thing I always told, please use the CRR. So the first thing will be capital redemption reserve of how much, my dear students, given to us in the balance sheet? 1,60,000. Okay, over. Now come to the securities premium. How much is there in the question? 1 lakh rupees is already there in the question, correct? But my dear students, in this entry also we have taken the, or we have received further securities premium, correct? So 1 lakh balance is already there. With that we are adding the 10,000. So how much will be this? 1 lakh and 10,000. Why, madam, 1 lakh and 10,000? Because it is coming in this entry. Already balance 1 lakh is there. I have now received another 10,000. So I am taking 1 lakh and 10,000. Simple. Now come to the third one. All of you please see here. Very important. Now we will go and touch the capital reserve because they have given you the word realized in cash. So how much is there? 60,000 is their capital reserve. So I am taking that balance here. All of you please see. I will take capital reserve balance. How much is this balance? It is nothing but 60,000 is there. But all of you please see. In this entry again 80,000 I am transferring. So 60,000 plus 80,000 is nothing but 1,40,000 I have taken from the capital reserve. Okay, how did you take, madam? It is received in cash, no? So the opening balance which is already there plus whatever the balance that I have transferred now on account of the shares forfeited, that also I have considered. So the total is 1,40,000. Then we have general reserve. So general reserve account comes to how much? The general reserve account given to you in the question is 1,20,000. Now, can we add everything? 1,60,000 plus 1,40,000 gives you 3 lakh rupees. 3 lakh plus this 420. 420 plus this is 530. So 650 minus 530 is 1,20,000. Now this will come from the profit and loss account, which is the balancing figure. That's all. I've debited all of this to bonus to equity shareholders. How much is the value? 6,50,000. How much is the value? 6,50,000. All of you please see here 6.5 lakhs. So it is 6,50,000. I have taken all these accounts. This directly you will get it whatever is there in your account. Here securities premium alone, this 10,000 premium I will add it and take 1,10,000. Capital reserve also I have opening balance 60,000. Whatever is there here I am adding it and taking it here. But only on the condition that the capital reserve is received in cash. Okay. Then general reserve, the entire value I am taking. The balancing figure I am taking 1,20,000 here. So this is the bonus to equity shareholders. And the final entry is nothing but bonus to equity shareholders account debit to the equity share capital. 6,50,000, 6,50,000. That's all. So these are the entries that you people have to pass from the beginning. Okay. Nothing big, nothing small. How many entries? 1, 2, 3, 4, 5, 6, 7. So 7 entries plus the working note will carry marks. Okay. So if you look into your particular suggested answers thing also, I will quickly show you the suggested answers also, which how they have presented is, you people have to know how they have presented, right? Otherwise, never you will understand. Where is this question in the suggested answers? Suggested answers for June they have given. All of you, please see this particular suggested answers, the same thing that I'm going to show you now. So in the books of, the first thing is the entry that we passed here, they have also passed. Okay. Now please come down a little bit. Bank account is being done. Then the shares forfeiture entry is being done on 1/5. All of you, please see the dates also. 1/5. This is happening. Forfeiture is also happening. And the same day you're issuing bonus also. So bonus also, like what we have done. Capital reserve is taken at 1,40,000, correct? We have also taken the securities premium 1,10,000, correct? We have taken the capital redemption reserve 1,60,000, correct? General reserve 1,20,000. Balance is 1,20,000. Good. And then we have shown this particular 65,000. Here also the working note comes like this. That is nothing but, first thing is you should show what are the number of shares that is being issued, 65,000. Then all of you please see here, the authorized capital should increase as per the details given below. So existing shares are 9 lakh plus 4 lakh plus bonus shares is 65,000. That is nothing but 6,50,000. So total authorized capital is now becoming 19,50,000. So the authorized, you should write that also in the working note. So what is the additional thing apart from this presentation is the authorized share capital should be increased to the below working. So how much it should increase? 90,000 shares plus 40,000 shares, which gives you 1,30,000 plus 65,000. So when you add these both, it will be 1,95,000 shares into 10 rupees, 19,50,000. That's all. Simple question. For this, you will be given 10 marks. But my dear students, as it looks this simple in the class, when you start or do it in the exam conditions, it will be a little difficult. Nothing to worry. Everything from whatever we have taught only. Making the final call, already I taught you an issue. Making the forfeiture entry and the reissue entry is also part of your unit number 2. Then come to the bonus issue, which is unit number 4. If you correctly use the concepts and write the working notes properly, you will get a total of 10 marks easy. Now, I will show you the next question that came in June. Okay, I will show you the next question that came in June for 15 marks, which is nothing but the illustration number 9 that we did the other day from preference shares chapter, redemption of preference shares. All of you, please see here. The following books are appeared in the books of MAC Limited. 80,000, 10% preference shares of 100 each, 75 paid up. So when it is redemption, make it fully paid up. Okay. So the remaining 25 rupees you are supposed to call. So 25 rupees into 80,000, you will get the value that you should take it in the first step. Next, you have the securities premium. Already capital redemption reserve is there. General reserve is there. All of you, please see. Same question we have in the illustration. Under the terms of issue, preference shares are redeemable on 31st March 2024 at a premium of 5%. Okay. In order to finance the redemption, the company makes a rights issue of 60,000 shares at 100 rupees at a premium of 10%. 25 being payable on application, 45 including the premium payable on allotment, and the balance on 1st of August. So are they making the final call now? No, they are making it on 1st of August. The issue was fully subscribed and everything was happened on 1st of March. Allotment money also received on 25th of March. Now read. The preference shares were redeemed after fulfilling the necessary conditions. After fulfilling the necessary conditions as of 31st of March. So this is that same question, my dear students. They are asking you to do what and what? Please see, you are required to pass the necessary journal entries to give effect to the above arrangement and also prepare the notes to accounts on the share capital, reserves and surplus relevant to the balance sheet immediately after the redemption of preference shares. Ignore the date column in the journal. The same question has come in your illustration number 9 in your preference shares that I did for you in the last class. That is day before yesterday I did to you. No, what was that I was talking about? First thing, the preference share capital out of 100 rupees, only 75 rupees is being paid up. So what you are supposed to do? Remaining 25 rupees, make the call. So what was the call that we did? Percentage preference share call account debit to percentage preference share capital. Okay, that was 25 into whatever number of shares here it is given. How many preference shares are there, ma? There are 80,000 preference shares. Okay, so 80,000 into 25, you will pass that entry. Bank account to preference share, whatever final call that we receive, the same amount will come. Now, my dear students, what is this? It is same. But what is the only thing that you people have to see there? What we have already done. I'm not going to work out this question, but I'm going to only show you the amount of the CRR, how we are going to calculate. Okay. We are going to see the value of the CRR, how we are going to calculate. So the question, same thing, 6A, the total face value. How will you compute the CRR? Total face value or the nominal value of the preference shares minus the face value of the equity shares that is being issued. Correct? Now, what is the total face value? 80,000 equity shares into 100. I made the final call of 25, so everything I received money. So it comes to 80 lakh rupees minus face value of equity shares. How many equity shares I am issuing, ma? I am issuing 60,000 equity shares at the rate of 100 and what is the value? At the rate of 110. How am I collecting this? 25 on application, then 45 on the allotment, that is including the premium. The moment I say including the premium, what you people have to see? 110 rupees, 10 rupees premium. Then I should write the balance as and when, or it is during August. That means it is not called now. It is called at a later date. So what am I supposed to do? I have to find out 60,000. I have made application. I received allotment, but I should take only the face value. Application face value 25. Allotment face value is how much? 35. Okay. So 25 plus 35 is nothing but I am getting 25 plus 35 is nothing but 60 rupees into 60,000. So it is nothing but 36 lakhs is the value of my face value of equity shares. My dear students, I have already done these questions. I have explained to you. It is nothing but same as your illustration 9 of your unit number 5. The same question has come. Only there is a change in the amounts. Okay. So this comes to 44 lakhs. So CRR will be created to this particular extent. And then you are redeeming these preference shares at a premium. So 80 lakhs will be, what is the premium value that you have received? Premium is nothing but 10% of 5% of this value. So 5% comes to 4 lakhs. So 84 lakhs is the total value that you have redeemed. Now we shall very quickly look into the presentation that they have given to us in our suggested answers. Okay. In the suggested answers, the first thing that they are showing, this came for 15 marks, okay? The same 15 marks which I have taught you in the class, nothing more, nothing less. So that is why I am stressing again and again, please prepare from your study material. Rather than doing so many outside questions, prepare your study material again and again. It's very simple, the question will be. So the first one I told you, 10% preference share final call to 10% preference share capital. That 25 rupees on 80,000, 20 lakhs, they are making the final call. Then you have the bank account receipt entry. Okay. Now come here. They are making the entries for what? They are making 60,000 equity share rights issue they are doing, no? So this additional shares they are issuing, first application money is 25. So I need to pass the bank entry first. So 25 rupees into 60,000 is 15 lakhs, okay? Next I am doing the transfer entry, equity share application to equity share capital, same thing. Now come a little down. Now when you come down, allotment also they are doing, correct? But allotment, it has the premium value. What does the allotment have? It has the premium value. So what is the premium value, all of you? Please look at this particular thing. The premium value is 60,000 shares into 10% into 10 is the premium. So 6,000 is the premium. And then 60,000 into 45, the total value 27 lakhs comes directly to share allotment. And share capital is the face value. What is the face value, madam? 60,000 into 35 rupees is the face value. Okay, my dear students. Now come down. Then you have bank account to equity share allotment over. Now see here. Capital redemption reserve, how you will create? I have general reserve in the question. They have created. Yesterday, Shoaib asked me in the previous class, Madam, already there is a balance in the capital redemption reserve. No, then what to do? So this doubt, all of you please listen. Even though there is a balance in your capital redemption reserve earlier, you just ignore that and create it for the total value now. I have done in the working notes no CRR 44 lakhs. So I am now creating general reserve account 44 lakhs, capital redemption reserves 44 lakhs. Then I told you 80 lakhs is the face value and premium on the redemption is 4 lakhs. So to preference shareholders, 84 lakhs is the total value I am redeeming. Then what is happening? Preference shareholders to bank, I am paying this particular 84 lakhs. What will happen to this particular premium on redemption? I am supposed to close it the same day. So it will be general reserve to premium on the redemption. That's it. The same entry, the same thing we have done in illustration 9 has come again. That's all. Nothing more, nothing less. You don't even have to worry about anything. That simple is this question. Okay, my dear students. Now come to notes to accounts. Everybody come to notes to accounts. What is that given to you? Okay, now all of you please see how they have presented equity share capital. How much? Earlier I was having 2 lakh equity shares given to you in the question. Correct? No, where madam it is given? Quickly let us see the question. Equity share capital. They have given you in the question 2 lakh equity share capital, which is nothing but 2 crore rupees. Now I have additionally given the 60,000 equity shares also. So I have to write it totally there. How much is the total value? Let us look at here. 2 crores, and out of the 60, I have called up only the 25 rupees of application, 35 rupees of allotment. Correct? So that is 60. So 36 lakhs I have made the additional issue, 2 crore 36 lakhs. Now reserves and surplus, already I had 6 lakh 50, and now I have given another 60,000 shares at 10 rupees premium, 6 lakh rupees. So this is the total. Now come here. Capital redemption reserve, I have opening balance 42. Now I have created 44 lakhs. So the total comes to 86 lakhs. General reserve, you should be very, very careful because out of general reserve, you have taken money given for the creation of the CRR. So subtract 44 lakhs. Then finally, the premium on redemption 4 lakhs also you have given from your general reserve. Remove that amount also. So 85,000 minus 48 will give me 37 lakhs. So this is the value. They have given you like this. We have also calculated the same way here. Okay. What is the note? At the time of redemption of preference shares out of accumulated divisible profits, it is necessary to transfer to the CRR an amount equal to the amount repaid on the preference shares of the face value less the proceeds of the shares. So they are just giving you one particular note stating this particular thing. They are telling you we are supposed to create CRR which is equal to the face value of the preference shares redeemed minus the face value of new equity shares issued. That's all. That is given as a note. When you do the working note, you can show that. The same question I have worked out in the particular last class. I want all of you to go back and look at that particular YouTube session where you will get the entire thing. Now you people tell me, after I have done these two questions, getting 25 marks out of the chapter 11, it is quite easy. Yes or no? Now we will be going ahead with the September paper. Because September paper, you have not received your suggested answers. Still, it is not being published on the site. These questions you can have doubt. I think Hemalata on the other day, first day or something, she was asking doubts with regard to these particular questions. So now we will be looking at that particular chapter. Okay, not chapter, September paper. Let us see. Okay, now I'm going to share the particular screen and everybody very attentively, please listen to me. The same pattern will come. The first question is very important for all of you. Okay. The first question, it is quite important. And next, please see. Quite important in the sense it's compulsory. That is the meaning of important. Nothing more, nothing less. Okay. So the same thing, it comes for the 12 marks and all of this 4 marks, 20 marks. And then you have all of this, the errors, journal entries, bills of exchange. So I am going to only what I am concerned with, okay? I told you always 5C you will get for 10 marks, correct? Simple questions have come actually. Quite simple. Not at all difficult also. Okay. So all of you please look at this particular question, C question 5C, which is 10 marks. It has come from the redemption of debentures, which we have just done. Okay, so this is nothing but it talks about issue also, it talks about redemption also, it talks about interest also. So there are various things that is there, but trust me, it is one of the most easiest topic or easiest thing that you can have. First, read this particular question. XYZ, an unlisted company. So there I told you unlisted company means the meaning is you are supposed to create what? DRR, which is equal to 10% of the face value of the debentures to be redeemed. And then DRR investment reserve also will come into the picture, correct? You will have DRR and DRR investment also in the picture. That is why they have used the word unlisted company. Okay. How much did they issue? 6,000, 12% debentures of 100 each at a discount of 5%. So the first thing here is the issue entry. So this is a combination of two units, issue of debentures unit 3 and redemption of debentures unit number 6. All of you please see, the interest is payable annually on March 31st every year. So my dear students, here the interest is not paid 2 times. It is not paid semi-annually. It is paid annually. Much easier. Our life has become very easy. Only once in a year I should pass the interest entry. Okay. But my dear students, I have taught you interest will have TDS for that. Correct? But here, if TDS I have to do in this question or not, if it is your doubt, please take a clarification that if it is given to you in the exam question that do TDS or charge TDS, only do TDS. Otherwise, you people don't have to extra complicate yourself. Okay. So there is no TDS given to you here. Need not take that. Now, debentures are redeemable at a premium of 10%. Oh my God. So what is happening, my dear students? The debenture premium is redeemable at the rate of 10%. That is premium on redemption is there. So the 6,000 into 100 is there, no? 10% I'm going to add and repay them in 3 equal annual installments beginning from 31/3/2022. Okay. The company invested in specified securities for the redemption of debentures. Entire loss on the issue to be booked in the first year. You are required to pass the journal entries. If you ask me, this is going to be a very, very easy question. So the September 2024 attempt, question number 5C, we are going to do the journal entries, okay? In the books of the journal entries. So here, my dear students, pass the journal entries for 3 years together. It is not only 1 year, but it is 3 years. So the first year we are going to see when you have issued the particular debentures. Okay. So before that, we are supposed to, just a minute, the camera is getting adjusted. Don't worry, it will come back. So if we are going to do this particular question, the first thing we need to understand is how many debentures are being issued. Okay. So it is quite simple. We have 6,000, 12% debentures. Okay. 6,000, 12% debentures are issued at the rate of 100. Okay. While you are issuing normally? No, you have issued at a discount of 5%. So 6,000 debentures at 100 minus 5, 95 they have issued. Okay. So there is discount in the question at the rate of 5 rupees. How much is the discount, my dear students? On 6,000 debentures, we have 5 rupees. So it comes to 30,000. This is clear? Now, apart from this, I also need to show the premium on redemption. There is premium on redemption also. How much is that value? 6,000 debentures. I am redeeming it at 10% premium. So 10% on what value, madam? On the face value. What is the face value of the debenture? 100. So 100 into 10% gives me 10 rupees. So it comes to 60,000. So the total value of 90,000 is my loss on the issue of debentures. So this was the concept I taught to all of you in unit number 3. Last concept. What did I tell you? Whenever you are issuing the debentures, you can issue it at par premium or discount. When you issue at par premium, no problem. But when you're doing it at a discount, there is a problem. It is like the loss for the company. So the first entry, the particular issue entry. My dear students, I told you everything will be collected in one installment itself. Okay. So I am directly passing the entry of bank account to 12% debenture account. Okay, 12% debenture account. This I will do. But if I am having the discount, I will be showing it on the debit side. That is nothing but loss on the issue of debentures. All of you clear? That I will debit. When you are having a premium on redemption, that will have two effects I told you. You will write that as debenture redemption reserve. No, premium on debenture redemption premium. Reserve will come here into the question. It is nothing but the 60,000 you are showing it here. Okay. Now what is bank? 6,000 debentures into 95. I just received 5 rupees less. Okay. So here it will be 5,70,000 I have received. Correct. Now here the loss will be 30,000, which is the discount loss, and then the 60,000, which is the redemption premium loss. So this will be 90,000. Always percentage debenture face value. So 6,000 debentures into 100. I will get 6 lakh rupees. I will get how much? 6 lakh rupees. Now you see the debit and credit is matching. 6 lakh 60 is matching. This is the simple concept that I have taught you under your unit number 3, issue of the debentures, where we have specifically spoken about if the issue is being done at a discount, it is a loss. Apart from that, the redemption terms also will be given to you originally. Initially itself they will give. So if there is a premium on your redemption, that is also a loss for you. So what you should do, you should record it everything here. So this is being 6,000 debentures issued at 95 rupees, and that particular entry I am making one single entry. Clear everybody? I am making this one single entry. Okay, madam, this is being done, madam. Now what is the second entry I have to do? So this is year 1. Okay, in the first year we are talking about all of this. So I have issued it. Okay, now it is also given in the same year, first year itself, the loss should be written off. That means what is the total loss? The total loss is 90,000, which I have to write it off in the first year itself. What do you mean by write it off? I have to take it to the, or I have to take it from the P&L account. Clear? In that unit 3, we were discussing about if the debentures are equally repaid, then every year some portion should be taken. Correct? Here, they have made your life very easy. Even though they are repaid in 3 installments, it is given to you. You need not open the tabular column, find ratios, nothing. Because the word given to you is the entire loss. Look into your particular text. This particular question I will show you. The entire loss on the issue to be booked in the first year itself. That's all. This is our keyword. So what I will do is in the first year itself, I am going to take off the entire loss from the particular P&L account. So loss on the issue of the debentures account will be nothing but 90,000 and 90,000. This is for writing of the loss. So you can just write in the narration, writing of the loss on the issue of debentures. This is the second entry. Why the second entry? I pass the issue entry and then I pass this entry also over. Now the third entry will be after this is being done, I come to the end of the first year. Okay. I come to the end of the first year. When I am talking about the end of the first year, very, very important. I need to follow so many things. What is that I need to follow? The first thing is I need to make payment of the interest. Okay. I need to make the payment of the interest. How is the interest being calculated? All of you please see here. The interest will be calculated always on the face value. So what is the face value? 6,000 debentures into 100. So 6 lakh rupees into what is the percentage? 12% debentures, which comes to 72,000. So what is the interest I am going to pay at the end of the first year? 72,000. So what is the entry I have to pass? Simple entry. Debenture interest account debit to the bank. See, my dear students, when we were passing the debenture interest entries in the textbook, we did debenture interest account debit to debenture holders to TDS. Here we are not taking TDS because it is not given to us in the question. Make your lives very simple. And I am not showing it as 2 entries because already we have a lot of entries to pass for the 3 years. So I am directly taking debenture interest account to bank. So I am paying the debenture interest of 72,000 into the bank. Okay. I am paying the debenture interest of 72,000 into the bank. Now, after this, they are talking about redemption. My dear students, they are talking about redemption. So just now we understood that for the purpose of redemption, you are supposed to create 2 things. What are they? One is the DRR equivalent to 10% of the face value, which is nothing but 6 lakhs. So 60,000 I have to create DRR out of my P&L. In the first year itself, full value I will create. Next, I will go to the DRR investment account. This is nothing but 15% of the face value. 6 lakhs, only the face value. So it comes to 90,000. So in the year beginning, first year, I am supposed to create for the entire value. So what is the entry for creating DRR? P&L account debit to the debenture redemption reserve of 60,000. This is my DRR. So 10% of the face value is equal to DRR narration. Very, very important. Okay, madam, I have done this. Next, what should I do? Create your investment reserve, which is nothing but DRR investment account debit to bank. So I am going to invest 90,000 out of my business for the purpose of the redemption of debentures in the future. So 60,000 I created a DRR, 90,000 I created an investment reserve. That is the investment I have done outside. Is this clear till this? So the first is the issue entry we passed. And then this loss, the same year I have taken it because they have given to you in the question telling. In the same year, the entire loss of 90,000 can be booked and taken. So I have passed this entry. The next one, debenture interest. So interest is being paid annually. So 1 year is over. So at the end of the year, there are 3 things that I have to do. One is I should pay the interest. Second is the debentures are redeemed equally in 3 years. So first year end will be the entry. Second year end will be the entry. Third year end will be the entry. So they have asked me to show the entries for 3 years. Okay. So the first thing is I have to pay interest to them. Here don't consider TDS because it is not given to you explicitly in the question. Okay. So this is the interest paid. Then what I did? as per the rules that we have learned in the redemption of debentures, 10% of the face value take it to the DRR, which is 6 lakh into 10,000. 10% will comes to 60,000, and 15% I have to create a DRR investment. So investment will come to 90,000. Okay. Now we are going to pass the debenture redemption entries. Okay. So the first year, how much you are redeeming, ma? This is again one more working note. How much you are redeeming? Out of the total 6 lakhs, I am going to redeem it equally in 3 years. So every year I am going to redeem 2 lakh rupees. So when you are writing 12% debenture account, you are not supposed to write 6 lakhs. No, first year only 2 lakhs is being repaid. On that, do you have redemption premium? Yes. Premium on redemption account debit will be 10%, 20,000 by the debenture holders. What will be the debenture holders value? Debenture holders value will be 2,20,000. How much will be the debenture holders value? 2,20,000. Okay. So this is by the debentures being transferred. Okay. Then when you are making the payment, simple. Debenture holders account debit to bank account. That's all. How much is the value? 2,20,000, 2,20,000. Okay. So this is the payment made. And here, my dear students, all of you, please see, apart from this, what is important? I have created these particular DRRs. So once after I am going to write it off, or I am going to repay the debentures, am I not supposed to again transfer the balances? This DRR will go into the general reserve, yes? And then the portion of this bank I have to sell and get back up. But here there is a catch. You created DRR together in the first year itself, correct? So 60,000 is for the entire value of the debentures of 6 lakhs. 90,000 also entire value of 6 lakhs. But 3 years it is getting repaid, correct? So you should take only the amount proportionate to this particular value. That is nothing but 3 years, no? So then in the first year, how much value you will transfer to the general reserve? Only out of 60,000 divide by 3. How much you will transfer? Only 20,000. So the amount that I am going to transfer to this particular, I have to transfer the value to the general reserve. So DRR account debit to the general reserve will be only 20,000. Why, madam, 20,000? 60,000 I have got, no. 60,000 is the full value of 6 lakhs. But every year you are only taking 1/3 of that value. So this year I have repaid only 2 lakhs. For 2 lakhs, 20,000 is the value of the DRR, which I don't want. So the amount of this DRR of 20,000 will now be transferred to my general reserve. As simple as that. DRR to the general reserve. Okay. Now the next one will be same way. Out of this 90,000, what I will do? Entire value I will sell? No. Only 1/3 of the value I have to sell, because this is happening in installments. Okay. So the answer or the entry will be bank account debit to the DRR investment account. So this will be 30,000. And this will be 30,000. So these are the entries. This is year beginning. Year beginning, I passed this entry. I passed this entry. And this P&L DRR I have passed during the period. Then these are the redemption entries. 2 redemption entries I have passed. Then I am transferring the balances. That is out of the 60,000. Till now we saw entire 60,000 was transferred, so you didn't have a problem. But in this question, it is done over the years. So proportionately only I am taking to the general reserve. Proportionately only I am taking it to the capital, I am selling only that particular investment. So this is what I will be doing it in the year 1. Now, my dear students, year 2 will become very, very easy. Madam, should I post so many entries? No, not required. This entry will not come. Correct? This entry will not come because already issue may you have done in the first year. So that will not come. How about this entry, madam? This also will not come because already you have passed the entry. Over, close. This entry, will it come? No, madam, I have already passed in the first year. It will not come. So what are the entries that will come in the second year and the third year? Very, very easy. What are they? Only the debenture interest will come because you have to pay the interest on the remaining debentures. No, debenture interest will come, and then you will have these redemption entries and again these two entries. So there will be just 5 entries that I have to pass in the year 2. Shall we go ahead and pass? So did you understand everything? In the year 1, there was this issue entry. In the issue, we recorded the loss, which included discount plus the premium. We then written off. We have written off the loss to the P&L. Then we paid the debenture interest. Then we created the DRR. Then we made the investment. So this was 10%, this was 15%. This were all clear. Now when you come to redemption, there is one condition. Not in 1 year, but in 3 years I am going to redeem. So by 3 I have to do the value. So first passing entry for 12% debenture, 6 lakh by 3, 2 lakh rupees. On that 10% 20,000 and by debenture holder 2 lakh and 20,000. Debenture holder to bank, same 2,20,000. My DRR, to the extent I have redeemed 1/3 of this total value, I will now transfer to the general reserve. And then 1/3 of the total value of the investments, I will sell it now. Okay, this is year 1 is over. Year 2, only simple 5 entries will come into the picture. Year 3 also the same entries will come. So I will be working out for the year 2 and year 3 only the interest entry I will work out. The same things will come again and again. Now year 2, all of you please see, the first will be year 2 end is interest on debentures, account debit to the bank, correct? Now here important, 6 lakhs in the previous year you had, but how much you redeemed? Face value 2 lakhs I have redeemed. So on the remaining 4 lakhs I have to pay 12% interest. So it comes to 48,048. Why did you do this, madam? Because I repaid a portion of the debentures. If I don't have their money of this 2 lakhs, why should I pay interest? I will pay interest on the money I have with me. So 6 lakh minus 2 lakh, this is 4 lakh. The next entry will be the redemption entry. 12% debentures account, debit to premium on redemption, account debit to the debenture holders. How much is the value? This year also it will be 2 lakhs only. Because second year that also comes to 2,20,000. Now we have debenture holders to bank. That is nothing but 2,20,000. Write the narrations. And finally, we have to transfer that DRR account debit to the general reserve, which will come to 20,000 because for the second year also 20,000. And this 30,000 also will be coming. So 1, 2, 3. So this is the first entry. This is the second entry. This is the third entry. This is the fourth entry. And this is the fifth entry that I have to pass. 5 entries. Okay. This is year 2. Year 3 also, these entries will remain the same. No change. Only the interest entry will now change. What will happen to the interest? Interest account debit to the bank. Okay. So it will come to 4 lakh minus 2 lakh because existing balance was 4 lakh, correct? So this year I paid off 2 lakhs. So there was balance of only 2 lakhs. On this 2 lakhs, 12% will come to 24,000 and 24,000. That's all. As simple as this. With this, we are completing. But you people have to pass, apart from this, these entries also you have to pass in the third year. Okay. So total number of entries will be year 2, 5 entries, year 3, 5 entries. And in the year 1, we had a total of 10 entries. So totally around 18 to 20 entries are coming for 10 marks. So one entry will carry half mark each. All of you are supposed to concentrate on your presentation and step by step also. Any one entry, if it is wrong, you will lose only half of the mark. So have that in mind. Try to do the working notes clearly and then show all of this. Simple logics and simple concepts, but only thing is we are doing 2 to 3 concepts put together in a single sum. Like issue we are taking, issue may we have loss also. So discount is also there, premium is also there. So that total loss is coming. Writing of the total loss, interest is coming, redemption of debentures is coming. So DRR and DRR investment we have to create, redemption entries we have to pass, and then we should ensure that the DRR is converted to general reserve and these investments are also sold. But the only difference is it is being done in installments. It is not done together. That's all. As simple as that. Okay. Now we will look at the one last concept or the one last question that was pending here, which is coming for 15 marks. Okay. P Limited issued 6 lakh equity shares at a premium of 10 rupees at a premium of 2. So 10 plus 2 is 12. Payable on 3 on application, 5 on allotment, and balance in 2 calls of equal amount. All of you please see 2 calls of equal amount. This is a very simple question. So I will just explain how you have to do. You can do it. Just a very simple question which is dealing with the issue of shares and forfeiture of shares. That's all. Okay. So how many shares? Just a minute. It is 6 lakh equity shares at the rate of 10 plus 2, which is collected as 3 on application, 5 on allotment, and balance in 2 calls. So 12 rupees you need, already 8 rupees you have. So the remaining is 4 rupees. That you have to take it in 2 calls. So 2 rupees first call, 2 rupees final call. Okay. And here you are collecting the premium. So this is application, this is allotment, this is first call, and this is second call. This much you need to first remember. Now again, I am sharing the screen. We will read the question further. What is the question? All of you please see. Applications were received for 8 lakh shares and pro rata allotment was made to all applicants. So there is no rejections. Pro rata is being done. Excess application money was adjusted towards the allotment. Okay. Harish, to whom 1,600 shares were allotted, failed to pay both the calls and his particular shares were forfeited after the second call. Is anything given about reissue? Nothing. Pass the journal entries and prepare the bank account. Very, very simple question. So what is that you people have to remember? 8 lakh shares have been subscribed for. So the excess application of those 2 lakh shares into this particular value of 3 is nothing but adjusted towards allotment. Okay. So shall we pass the entries very, very quickly, everybody? I know it's actually about time, but we don't have an option. Okay. So the next 5 minutes, we'll finish this off. So the first one is the bank account debit to equity share application. So it is 8 lakhs into 3, which comes to 24 lakhs. Okay. So the first one, whenever there is a pro rata allotment, take the higher number of shares, multiply it with 3. And then come to equity share application, debit to equity share capital. When I told you this particular entry, CBA entry will come into the picture, correct? But here bank is there are no rejections. So it will just be entirely adjusted. So equity share allotment, it will go ahead. So this 24 lakhs will remain the same. What is the face value? I issued 6,000 into 3. So it will be 6 lakh equity shares into 3 will be 18 lakhs will come here. And the remaining 6 lakhs, which is nothing but this excess, I will adjust it. That will be the entry here. Okay. So the same way you can start passing the entries for allotment also. So equity share allotment, you have securities premium. So it will be equity share allotment account debit to share capital to securities premium. How much will be the value? I told you 6 lakh into 5. So 30 lakhs will come here. 6 lakh into 3. 18 lakhs is the face value. 6 lakhs into 2. The premium is 12 lakhs. This will come here. Then when I go to the bank account, it will be equity share allotment. 30 lakhs you cannot ask because earlier you received 6 lakhs. So 30 minus 6, 24 lakhs will come into the picture now. So these are the 2 entries for application. These are the 2 entries for allotment. That's all. Now what is happening? A person who is allotted 1,600 shares, he failed to pay the 2 call money. So you have forfeited the shares. So when there is calls in arrears, my dear students, when there is calls in arrears, if you are going to pass the respective calls, okay, when you do the share first call, there will be arrears of 1,600 into 2. It will come into the bank entry. So I will do for one call. You can do it for the other call also. So equity share first call account debit to equity share capital. 6 lakhs into what is the value? 2. So 12 lakh, 12 lakh. Now when I'm doing this bank account only, I understand there is calls in arrears, correct? To equity share first call. So 12 lakhs will come. What is calls in arrears? 1,600 into 2 rupees didn't pay. So 3,200 didn't pay. So I would have received 11,96,800. This will be the entry. For first call also, the same thing repeat for the second call also. That's all. First call also these two entries, because the same amount of shares, no, the value of the call is also the same. So it will be the same number of equity shares also. Okay, same number of equity shares it will be there. And you can pass these two entries again. Now then go to the shares forfeited entry. So share capital account I am taking, debit to shares forfeited to calls in arrears. That's all. There is no reissue entry, so don't need to bother. How many shares totally? 1,600 into how much it is? 10 rupees. So it is 16,000 rupees shares cancelled. Out of which how much he didn't pay? 4 rupees he didn't pay. So 6,400 he didn't pay. 9,600 he paid. Always for this, don't go for into confusion. Just take the balancing figure. 16,000 minus 6,400 is 9,600. It is 9,600. So with this, the sum is not over. You should do the bank account. So if you ask me how to do the bank account, very simple. In all of these entries, bank account is getting debited. So debit 24 lakhs, again debit 24 lakhs, again debit this 11,96,800. And again, if you pass the final call entry, again you will get 11,96,800. 4 amounts you're going to debit, add it and show. That's all. One of the most easiest and simplest. You don't have ratios. You don't have to calculate what is the shares forfeited or the capital reserve entry. Just pass these entries. You have a pro rata allotment and everything is adjusted, and then take it here. There is final call and first call. There is only the calls in arrears. So premium amount also is received. A simple forfeiture entry you're going to pass. So that is it with regard to this particular chapter number 11. Yes. So as this is my last session, I'd like to thank everybody of you, the students, for patiently listening for whatever it is. And the second thing is, since I was not able to talk to you or summarize everything in Hindi, so that is one part of it. But I hope the other ways, when you read the question also, it will be there in English only. No? So most of the things should be understandable. So on that particular note, I think we will finish today's class. Yeah. And meet you again in the next class. All the very best for all your exams. Sit down, do it concept-wise, practice again and again, understand the concepts, practice every time, set time and do it. Under the exam conditions, it's going to be really easy. Okay. Thank you.